Big moves today in oil. The complex is down 3%. I guess the question is, how much geopolitical risk premium was there priced in to begin with?
Yeah, good morning, Jumana. The oil price has been coming down over the last couple of sessions as we wait for an attack, and now we're getting these reports that it won't be on those oil installations, which is a really important factor in what the market has been looking for. We've seen kind of a leg up in geopolitical risk this time around as fighting intensified between Iran and Israel, and we had those direct attacks again. So we've been looking more like a $5 to $10 premium based on the geopolitical risk. Up until now, we'd seen swings of about $5 tops, and the market had been very slow to react to the geopolitical risk because it hadn't been impacting the supply. So now that we have that potential of bringing Iran more into the fight here, that's where the risk rises for an interruption of supplies, because Iran is a huge producer, and they also do sit right there on the Strait of Hormuz, which is the exit out of the Persian Gulf. So it's a very important trade route.
A couple of other data points caught my attention. OPEC Plus cut their oil demand growth estimates for the third month running, and they tend to be on the higher side anyway. But then also, crucially, China oil import data once again saw imports declining for a fifth straight month. So what does that tell you about the fundamentals here?
Yeah, so that tells us kind of what's going on in the underlying market, that there's weak demand going forward. As you said, OPEC has had some huge demand estimates, very optimistic, something like over 2 million barrels a day for this year, when a lot of the analysts were showing even earlier in the year slightly over 1 million, now a lot saying below 1 million barrels a day of demand. So that's a big change. They're also tweaking their estimates for 2025 because OPEC is supposed to bring some oil back starting in December, and that's going to increase the supply. That risks causing oversupply and some oil in storage next year. So that's why people are a little bit more bearish on those underlying fundamentals. And one thing that we should also mention is that markets, again, were a little bit unperplexed by the news coming out of China. They had this meeting on Saturday about some additional stimulus, which did talk about additional stimulus without that many details. So the market is really watching to see if that stimulus is going to impact kind of the retail market, where we get that fuel demand. Rising fuel demand in China causes rising crude demand, and you get more barrels flowing in there. Otherwise, China's got a huge refining complex which can export to the rest of Asia, thereby bringing down the margins in the rest of Asia. So we kind of need that piece to come back for traders and the market to be a little bit more confident about the future of oil prices.